Let's go across to Sam Ghosh, CEO of Reliance Capital, who joins us right now to talk about the deal. Sam, great to have you. Thanks so much for joining in. Congratulations on the announcement of the deal. For the benefit of our viewers, can you briefly take us through the contours of the deal?
Definitely, yeah. So the transaction with Nippon Life is for a 26% stake in the asset management company at 1,450 crores. And if you look at that, the valuation of the total asset management company is at about 5,500 crores. This also translates into about 6% or greater than 6% of AUM. So in those terms, it's a great transaction from a Reliance Capital perspective.
Sam, by when will the transaction be completed, and when will the proceeds from the stake reflect on your books?
Yes, we've signed the MOU. Different documents will also be filed with the regulators, being RBI, SEBI, and Competition Commission. We expect that, or we would like it that we can complete this transaction by 31st March, but that is obviously subject to regulatory approvals, so we'll await that.
The big question, Sam, would be how do you intend to utilize the proceeds from the stake sale?
Okay, if you look at Reliance Capital itself, today we have about 17,000 crores of debt. Nearly 15,000 crores is in the Reliance Commercial Finance and Reliance Housing Finance. So roughly 2,000 crores is sitting at Reliance Capital level. Part of the proceeds of this transaction will go towards repaying that debt at Reliance Capital level, and part of it will be kept aside for future ventures in the financial services space or future opportunities that may come about.
What synergies do you expect to build through this alliance? Sam, is there more of a strategic motive behind this deal?
Yes, we had always discussed with Nippon Life on three areas. One is on the managing of funds of Nippon Life in India. If you look at Nippon Life, they have nearly 30 lakh crores of assets under management, so that they have a sizable fund. Obviously, we'd like to manage some of their funds if possible, and we're in discussion with them on that front. And the second area where we want to work with them is on the distribution of our products, means Reliance Capital's products in Japan and in the Far East. There also we are drawing up plans on how we go forward. And the third area is where they can give us benefit of their expertise, be it in terms of processes, systems, risk management processes, compliance processes, and whatever the new products they have in their basket. Can we learn from that? Can we exchange ideas on that, as well as that will help benefit Reliance Capital Asset Management.
So, I mean, is there a sense within the think tank, Sam, to maybe use Nippon Life's international reach of distribution to market your products? I mean, the government has allowed foreigners to invest in India as well. How much of Japanese savings do you hope to channelize in India via this deal?
Correct. We will be certainly talking to, and we are in touch with Nippon Life on that, because that's the distribution portion, distribution of our products in the Japanese market especially. We would obviously look at how we can increase that substantially. We've just started working out the methodology and the processes, but obviously to grow the business will take us some time. In the next 6-7 months we should be able to start growing that business. Nippon Life has a very strong presence right across Japan and in some other countries, and we'd obviously take advantage of that to be able to target individuals as well as corporates and institutions.
Are there provisions in your agreement with Nippon Life for them to increase the stake in the asset management business?
At this point, our agreement is for 26%. We consciously decided, both parties consciously decided that Nippon would come in at 26%. So we don't have any other provisions for enhancement of that. We'll obviously discuss in good faith if they want to increase their stake at some point in time.
Okay. Importantly, Sam, what would be the debt level for the company and after this deal? I mean, from currently where it is, does it show a substantial change? How much does it change by?
As I mentioned, total debt level at Reliance Capital and subsidiaries is about 17,000 crores, of which if you take out the Reliance Commercial Finance and Reliance Home Finance, they have roughly 15,000 crores of debt. That debt has assets backed against it, so therefore it's a business which will continue to grow, and so therefore, and that business will obviously, if we grow at 20%, we increase the debt levels also proportionately. At Reliance Capital level, there's only 2,000 crores of debt, and that we'll obviously repay part of it after this transaction, and that level of debt is also quite reasonable for a company of our size.
What growth are you witnessing on the AMC side of the business as of now?
If you look at the asset management business, the asset management market obviously has gone through quite a lot of fluctuations, and AUMs have come down across the industry. But our focus continues to remain on getting more and more customers, more and more retail customers into our asset management company. Today we add about 100,000 retail customers per month through systematic investment plans, monthly income plans. And we'll continue that focus because our focus is that can we get into smaller towns, add more and more retail customers, because ultimately that's where the growth will be. Also, we've been looking at innovation. Our gold fund has done very well. We've got the largest assets under management under the gold fund, over 3,000 crores, and we'll continue to grow that. And we've recently launched our debit card on the liquid fund, and that also has started bringing in a large number of customers, and we'd like to obviously increase that portfolio also. So we feel there's tremendous opportunity because India will continue to grow, and the asset management industry may go through short-term blips, but long-term it will be a great success story.
How are the other businesses doing, Sam? I mean, life, general, the consumer finance, how are they expected to perform?
If you look at most of businesses have outperformed last year's figures in the last quarter. They'll continue to do so in this quarter and the next. I think the most important area is that all the companies will be profitable for this financial year. Obviously, on the general insurance side, there has been some regulatory changes. Regulators dismantling the motor third-party pool. I think the companies may have to reserve for further motor third-party losses in this financial year. We'll be advised by the regulator as and when that is required, and we'll have to provide for that. But other than that, I think other than general insurance, all the companies will show significant profits in this financial year.
Do you foresee the credit environment improving and cost of capital coming down?
I personally feel that there will, at least we expect that it has to improve the credit environment. RBI will obviously look at ways of coming out with guidelines on what should happen. But increase in rates I don't think will happen. Most likely, let's see, it will be either status quo or reduction in the rate environment.
Are we seeing a comeback from FIIs in the equity market, Sam? I mean, over the last 20 days rather, the rally, the funds that have come in, how the global markets are doing. Is that a sense that you're getting? And, you know, as a follow-up, and what's your outlook for this year as a whole?
I think it's very difficult to at this time speculate on how it will go, but it will all depend on how Europe shapes up and what happens in Europe. And on that basis, and what happens also in the US, because there's also now talks about US going to mild recession, that will decide on how FII funds come into India. But I think already the market has shown slight improvement in this financial year, and let's hope it continues to improve.